Hello friends, I am Honey Thakkar. Welcome back to my channel JJ Education. Today we will learn one of part of chapter number 1, that is all about equity fund. In this video we will learn what is equity fund and also benefits of investing in equity fund. So first of all, let's see the classification of mutual fund. Basically, mutual funds are classified in three parts: equity fund, debt fund, and hybrid fund. In that, equity fund are those funds which invest in stocks and shares of the company. Then the debt fund are invested in treasury bills, government securities, bonds, and debentures. And the third one, which is hybrid fund, invest in both equity as well as debt fund. So in this video we will see what is equity fund. Okay, so first of all, let's see the meaning of equity fund. As we have seen that equity fund are those funds which invest in a companies and financial institutions on behalf of the investors, and on the basis of fluctuations in the share prices, investors can get return out of it. Okay, so we can say that in equity schemes, the return of investors are majorly depend on in which type of companies the mutual fund investors money. So if selected shares are good, then the returns are also good. That's why we can say that the risk is very high in equity mutual fund, but similarly the chances of high return is also there in equity fund. Okay, so ultimately it will become good to invest in equity fund. Now for better understanding, let's see what is the benefits of equity fund. Okay, so first one is good return. Every investors wish to get more and more return out of their investment. In last 20 years, the equity fund has given 12 to 15% per annum return to their investors. And moreover, some of good equity fund has also given 20% per annum return to the investors. So we can say that equity mutual funds are good option for the investment. Now the second one is diversification. You can start your investment in this type of fund through 500 rupees also, because in the portfolio of equity mutual fund 50 to 80 stocks are there. So your 500 rupees will be diversified in 50 to 80 companies. Now if you want to purchase individual shares of these companies, then you require thousands of money. But because of mutual fund, your 500 rupees will be instantly diversified into these companies. Okay. Now the third one is professional expertise. As we know that in mutual fund there is one fund manager who invests investors' money into different companies. Now the fund manager has some of team members who constantly analyzes the market, and then they invest investors' money into different companies. Now mutual fund receive minimal charges for this type of services through the expense ratio from the investors. Okay. Okay, so now the next one is conveniency. It is very easy to invest in mutual fund and also to sell units of mutual fund. The investor can directly invest in mutual fund houses online or with the help of banks, brokers, advisors, distributors, etc. You just need to fill one form, or online also you can redeem your units, and after the redemption within 3 days your money will back to your account. Okay. Now next one is well regulated. See, mutual fund industry is highly regulated industry. Mutual fund houses continuously release their operations and investment data. They daily release their NAV also. And there are so many mutual fund houses who release their portfolio on a monthly basis. So the SEBI regulates this industry very carefully, and that's why the investors of mutual fund are protected very carefully. Now next is liquidity. See, if you want to sell some of the investment, then it can be possible through equity mutual fund. If your fund is open-ended fund, then you can redeem at any time. But yes, if your fund is close-ended, then after the initial offering period, it will transfer to stock exchange list. And at that time, through the exchange, you can redeem it. But yes, the close-ended fund are very less advisable because it will become very tough to sell the units of close-ended fund. Okay. See, there are so many securities are there in which the investment is become very difficult for the investors. But through the mutual fund, it will become very easy for the investors, and also they can have an excess of insecurity if they invest in mutual fund. Okay, so here we are done with my today's video. In my next video, we will see different types of equity schemes. Okay, so thank you so much guys for watching, and if you like the video, please press the like button and also share it with your friends. See you in my next video. Till goodbye. Keep learning, keep investing.